Happy Monday, everybody. Happy Memorial Day. I hope y'all are celebrating and acknowledging Memorial Day, spending some time with friends and family. I'm in my office here, so thanks those of you that are joining me for Charts and Coffee. Why am I in my office on a Memorial Day? Well, I'll tell you what, on a day like today, I appreciate what I get to do for a living. I love that we have a community that wants to get better at trading and investing. And what better way than to celebrate really getting better, honing your craft, and doing what you do at a better level. So again, thanks so much for joining me. It's not uncommon for me to spend a couple hours in the morning. Super grateful for what I get to do and for why I get to do it. So again, hope you guys are enjoying this Memorial Day. And Memorial Day for me throughout my career has been a kickoff to summer, for sort of this mental shift where everyone else is kind of going into summer mode. Again, what a great reminder, Memorial Day, to say, hey, you know what? This is when we find the next gear. This is when we start getting better at what we do in a much more significant way. So while everyone else is kind of chilling or whatever, I'm just, reviewing courses, notes, trades, and, the folks who do well in fall are the ones who decide that they're going to really dedicate themselves to being better through summer. So this is a great time. I get really excited about where I am as a trader because I know it's the summers that I just grinded away getting better at what I do. So again, great to see everybody. And let's get into some questions as always. All right. So first of all, first question. Absolutely. Hey there, Dan. Happy Memorial Day. Would I touch on how I use CCI and stochastics to play a part in my trading decisions? Okay, so what do I do with CCI and stochastics for my trading decisions? Sure. So stochastics are an oscillator. In other words, if the market's stuck in distribution, going back and forth, in fact, I would say that the S&P is borderline there right now. All right, I have a dog at the door. Hang on one sec. Guys get to look at my screens while I deal with the dog at the door. Memorial Day. Okay, what's going on, you two? Oh, okay. You guys want to talk to the show. All right. So the dog is hanging out by the gate, and they're like, Mom, why are you working? It's Monday. And the cat's looking right at him. So the little standoff going on here just outside the office. The cat's allowed in the office, but the dog is not. So yes, the cat's office ready. The puppy is not office ready. So, all right. So back to choppy markets. If you have a choppy market that is not a strong trend, and I would like to see at least 5 columns of double green to confirm at least even a new uptrend. So this, I would consider the S&P, this is the S&P futures. I would consider the NASDAQ. Right now I am looking at some currencies. I'm looking at some, Forex. So these are sideways markets. In a sideways market, stochastics are great. The CCI I will use for a trend reversal. So if the markets are trending lower, I'll give you another great example. This is one from March, April, but you'll see the shift here. See how the markets were heading lower, 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 double red, double red, double red. And then right in here, we shifted from red to blue to green. That shift in my grab, green, red, and blue candles, that shift shows we're moving away from a bearish momentum and sentiment to more neutral, blue, to bullish, green. And then when that's happening, we're also, as you can see, breaking the 34 EMA wave. That's the 34 EMA on the high, the close, and the low. As we're breaking up through the resistance of the wave, what I'm looking for is actually the CCI to be reading at least positive 100. So I use a positive 100, negative 100 on a 20 period CCI. on a 20-period CCI. So that's what I do with the CCI and the stochastics. All right, next up. Good morning. Good morning. Great to see everybody. All right. So when I break below my point of validity, the red wave in a trend, but I have not reached 25% premium loss, which is not unusual. Now, this is a question, hey there, and that's coming from my sector secrets. Now, you notice I have some links here in the upper left-hand corner. We had the sector secrets on sale. My partner here in the office, Trish, told me that, hey, sector secrets is on sale. We get a lot of folks asking about when does it go on sale? I said, we put that thing on sale? She goes, yeah, and it's going to be on sale this weekend. I'm like, oh, okay. So I'm letting you guys know. I think today's the last day. If you head on over to simplertrading.com/sector, it's going to show the old 597. You put in the memorial code, it will knock $200 off that for the first quarter. So I don't know how often we do this. I didn't even know that we put these things on sale. But yeah, if you've been wanting to check out the kind of analysis and the kind of trades we talk about so often here in Charts and Coffee, that is going to be a really good deal for you, at least to come check out what we do for the next 3 months. My goal is always, and my mom used to teach me this too, leave something better than you found it. You will learn, you will find a community. And if after a few months you say, Rog, I think I got it, or it's not for me, you're going to definitely learn things about the market that you wouldn't have otherwise, because we really do take an outside the box, very different look at how to handle trading. And even it's going to go into the way that you portfolio manage. It's going to go the way into the way you day trade, because it's a really philosophical shift in taking advantage of the connectivity of the market. So if you've been wanting to come join us, super stoked. I know we're going to have a bunch of new members tomorrow, and I'm looking forward to meeting everybody. All right, so point of validity, that's definitely a sector secrets conversation. Well, I still hold yes, unless, couple things, unless the reason for the break was a gap, unless the reason for the break was, for example, I don't want to take these trades into earnings. I don't want to see earnings be the reason for the gap. I will try to find what the news was that created the gap, because if it's just an analyst downgrade, thank you. That's the gift that keeps on giving, and I'll take it. Sometimes I'll even build a conservative position on that move. If it is something more alarming, SEC investigation, accounting issues, things like that, then yeah, it might be worth cutting it loose. But if it's something like a downgrade, or the market that you're looking at, let's say it's a heavily weighted stock, just use something like Raytheon. Let's say it's because I have my eye on Raytheon. Let's say it's a heavily weighted stock within a sector, that sector is just going out with the tide. I'm not going to be as concerned. So it depends a little bit on the why. Know your why. I think whys do matter to a certain degree. And then remember also, the 25% risk is from each one of our levels. So it's not uncommon to forego an aggressive level and focus on the moderate and the conservative, because that's one of the things that we do, in the sector secrets, which is say, hey, not everybody has, a large account. Some people are working with $15,000 accounts, maybe $5,000 accounts, and some are working with $500,000 accounts. It has to be scalable. In other words, it has to be a strategy and a style that can be executed at a small account level, but with fewer contracts, or at a large account level with maybe dozens of contracts, right? It's got to be scalable. The style doesn't change. The size of the position and the spot from which you engage the market is the difference. That's the differentiating factor. So the why does matter. And just remember that there's no harm in getting rid of an aggro level or a more, higher or initial level position while you still keep the moderate and the conservative. I end up with that a lot. I end up, that's not uncommon at all for me. So, occurs lots of, and if it occurs with lots of days to expiration, what's lots? I want to be at least over 30 days, at least over 30 days. One of the secrets, there's no secret, secret is very tongue-in-cheek, sector secret. Here's one thing that the sector army knows, and that is, sometimes you don't lose the game, you run out of time. And my options traders probably can feel this in a very real way. Sometimes you don't lose the game, you run out of time. That's the worst place to be when you are right about the move and you are right about the trend. You are correct. But then the theta decay of your option, you did not give yourself enough time to enjoy, well, your rightness. And I think that time is such a big differentiating factor, the way that we want to use that, whether we're collecting credit or whether we're buying debit. All right, so next up is, what do the lawsuits on Google potentially have? Well, so I've noticed, there's been a lot of chatter about what's been going on with Google and the Facebooks and the Apples and so forth. Google is interesting because it's inside XLC. That's very much a sector secrets way of looking at the market, index sector stock. It's within the XLC, and the XLC has been a relative outperformer. So I will say one way you could engage in Google is by XLC, not Google, because what you're also doing is you're taking advantage of Facebook and a lot of other stocks in the communications ETF that are doing quite well enough to keep the XLC moving up like this. So normally things like that, I think are going to be buying opportunities almost always. It's just that if you're engaging in that being the why, just bake into the cake, bake into your trading plan a little bit more tolerance for volatility and maybe a little bit more time. But if we were to get down to 2,300, look at that volume ledge sitting right there at the 34 EMA on the high. That's a pretty level. The 8 exponential, which is where that second red dot on my chart is sitting, right around another volume ledge. That's a pretty nice level too. I would treat that as aggressive aggro. But there are some nice volume ledges here, and volume is going to point out things that price alone just can't see. Also notice, now it's not as important because we've already closed this gap before, but when I see a big hole in the chart via a gap, that's going to be a relevant level, at least for the next 6 months for me. It's just going to be support and resistance. Okay. Are grab candles similar to early in and out? Now, no. So the logic to early in and out is a little bit more for momentum traders, Paul. And by the way, I believe early in and out's on sale in the store. Again, you can use that code Memorial for a lot of things that are on sale in the store right now. No, grab candles are a trending tool. Grab candles are about the 34 EMA. So they're measuring two different things to give you two different insights. I don't think they're at odds with one another. You can use early in and out, or even it's not even early in and out or 10x candles for different situations. But in other words, you can color code your chart and use different types of indicators like an early in and out for different environments. So no, they're not measuring the same thing, but it's not a supplanting conversation. One doesn't have to necessarily replace the other. It's how do you supplement your view of the chart depending upon the underlying strategy that you're using and the underlying environment. So I will oftentimes if I'm momentum trading, I might look at 10x candles, but the grab candles take care of everything that I need. For me, those are my candles. I've created those early in my career, and so I don't ever want you thinking. Don't think that you can't use something else. You certainly can. Here's what I have found throughout my career, though, is grab candles will complement just about anything else, and they're free. So why not check them out? So the grab candles are free in TradingView. They're free on Toss. They're free on TradeStation. There's a lot of, because when I first created grab candles, and I did not create moving averages, but I created why the candles color code. And I always made that open and free ever since, the early 2000s. So, there's a lot of versions out there of them across multiple platforms. And that's cool, because if people really understand what they say about trending environments that are very likely to have an expansion moment, like a squeeze, you're going to find they are really going to be a massive needle mover for your trading, because you're going to be able to, maybe for some of you for the first time, have a way to discern between what strategy is going to be best in a certain underlying market behavior. And for a lot of traders, that's the missing link. If there's a secret, that's it. Do the right thing at the right time. Look at the right kind of market for the strategy that you want to deploy. So once you figure that out, the market gets a whole lot easier to understand. All right. Pfizer. Pfizer was on my list. There we go. So yeah, Pfizer was one of the stocks that was on my list to look at, as was AbbVie, by the way. As was AbbVie. So let's go take a look at Pfizer. So the question is, long play, double green. Yeah, it was double green. It's gone yellow. That's fine. That's just a slight pullback in the trend. Nice volume ledge sitting right here. Remember that if Pfizer pulls back and XLV hasn't, be a little cautious, because if the stock, kind of the verbiage I use is goes first, there's a little bit of vulnerability, there's a little bit of danger that it could pull back a little bit more if the tide continues to pull out, go out, and this one boat has already started to move lower. But really nice volume ledge here. Just be careful. The other one that was on that list for me was AbbVie, and you can see the same thing happen with AbbVie. So be careful there. The 55 EMA has a really nice volume ledge as well. But I do like them both to the long side. But here again, I'll say, I love trading sectors, and that's sort of the secret. Why not look at XLV as well, which on my cards on the table, we do have a long position in. I think we're managing that one from a break even right now, because it is, we already bought a pullback. So I have exposure. Now, that's the other cool thing about the sectors. If you have a sector play on XLC for the aforementioned Google question, XLV for Pfizer, you already have exposure to the narrative, only it's basically spread out in the stocks that are highly weighted within the sector, within that ETF. So really cool way to take advantage of a larger narrative that you might really believe in, like the structure of. Let's see. Abraham asked, I referenced a day trading class. When is it happening? So yes, the day trading class is happening on June 26th. But we're gonna do the webinars for that class. I was actually working on some charts for that. We've been working on this class for a little while. Let me see here. Yeah, so I was working on some of the charts for that class and some of the new updates of the tools for that class. We've been working on that for quite a few weeks, actually, if not months at this point. And we're going to have the webinars in June, 2 of them, so you can see what the class is all about. And then the class is going to be our Super Saturday is the 26th. And then we have live trading that will go into July. So thanks for the question. I have a trading cat. Yes, I really do. Where did he go? He didn't come back into the office. He's not hanging out for charts and coffee. Sometimes he makes a cameo for charts and coffee. Let's see. Question here. Hey there, Alex. I'm looking to add Wingman Tracker to track my trades. What, if any, insight into your trading habits and styles did Wingman open up for me? Look, in fairness, I added Wingman Tracker 2.5, 3 years ago when my husband started trading. So we used that to track his trades so he could also understand his trades. But it really confirmed for me what I sort of already knew, but it was nice to see it in just sort of black and white, if you will, which is my trading habits. I like to put on a pretty steady stream of trades. I don't like to, I think this idea that we can sort of go all in on singular ideas is a tricky one, because that's sort of home run hitting, which is fine for some types of baseball players, traders. I think trading and baseball have fantastic analogies, especially being at the plate. So some traders are just home run hitters. That's great. They can see their pitch and they really load up. I think that the ratio of home run hitting to striking out is high, so you have to calibrate your mind to that reality. All right, then you have people like me. How many of you have seen Moneyball? I love that movie. The book is 50 times better. Michael Lewis, Moneyball, It's on my shelf here somewhere. Oh, there it is. Right next to the MVP machine, which is also another great one for those of you that are baseball fans. When I was young, I wanted to be a baseball player. So I love baseball. And I also wanted to be a race car driver. And I also wanted to be, what else did I want to be? Baseball playing, race car driver. Oh, photojournalist. That was what I wanted to be when I trader, for whatever reason, did not end up on the list. Go figure. So anyway, what I found out is my wiring is very much Moneyball. If you've never seen the movie, that's a great movie for today. It's a great movie to watch. If you've never seen it, read the book if you never have. And what you find is the whole idea was you just want to get on base over and over and over again, not about home run hitting and risking very little, if at all possible. And so the idea was to get on base, singles and doubles, singles and doubles. And if you watch the movie, there's a scene where at a key moment, someone knocks it out of the park. It wasn't necessarily planned. He was not a home run hitter, but the fact that they got on base, put them in the position to every now and then have a triple, have a home run. So what I want to see and what I think Wingman confirmed for me is first, second base, first, second base, first, second base. And then every now and then triples and home runs, not that common. And then the P&L really needs to be, a lot of people's P&L looks like an earthquake. I want that nice, smooth, movement higher. And then the other thing is when you lose, all my losses will sit just under zero, just by a little bit. And they'll be this, I have them, of course, but they're not big losses. And the other thing that I realized is my losses and my entries came in clumps. So that also confirms that in end of day chart trading, your trades, your retracements for my style, which is what we practice in Sector Secrets, is you do a lot of waiting. If you've read Jesse Livermore, he says the secret to trading for him was sitting on his hands. Very much what we practice, doing nothing. I talk about it a lot. Put your mouse and keyboard in a drawer. You can, it's actually okay to take your hand off the mouse. So a lot of waiting for your pitch, right back to Moneyball. So that's what Wingman really confirmed for me in a big way, for sure. All right. So what traders have influenced me most in my trading career? Byron, I could say, folks from Market Wizards. I was a big fan of Marty Schwartz's chapter, big fan of Larry Height's chapter. Is there anyone who doesn't read the original Market Wizards and not love Ed Seykota? Very philosophical. I think a lot of people resonate with him. I like Tom Basso. Love Linda Raschke's chapter. She's one of the few women. And then later on, I got to be friends with her, which was super cool. But I'll tell you what, if you were to ask me that 2 decades ago, my list would probably be like that. Now, probably the traders that influence me the most are the people that I trade with in the mastery and in the Simpler Futures room, because having the community of people sort of looking at the markets in a similar way, I think that's probably been more influential on who I've become now, going into my 34th, 5th year of trading. I'm actually moving into 3.5 decades of doing this with largely the same tools for 2 decades plus. And when those members start asking me questions about, hey, Rod, can we do this? And can we automate that? And is there a way to, so the clarity that they need and in many ways demand from me to be a better teacher, to simplify my approach, to find ways to navigate an environment where, we do want to use something more than just price. That's probably been more influential on me, being a teacher and having to do that for our members so they can be winning traders too. So I'd say that's probably been more influential now in the last 10 years or so. Was $597. So the $597 is the original price for those of you that are, that's the regular price. I didn't say original. That's the regular price this weekend for another, I don't know, day. I don't know when they pull the special. That's way above my pay grade. But I do know today, if you use Memorial, you can get it for $397. So check it out if it's something you want to if you want to do. As far as any other questions, customer service, billing, gang, I'm just here to let you know it's on sale. I don't know anything beyond that. I don't make decisions about it, but you can reach out to our amazing customer service. They will take care of you. And yeah, for those of you that might have just come on, yeah, just the next month, use the $397. See if you can't do that. I don't know. You'll have to ask them. They'll be back in the office tomorrow. All right. I just thought I'd do charts and coffee. I'm here in the office today. So reach out to the office tomorrow and let them know what the questions are, and they'll help you out. We have really, really great folks at customer service. So again, this is the kickoff for summer, isn't it? But it's Memorial Day, and what better way to appreciate the sacrifice that allows me to sit here in my office and be a trader and talk to all of you than just go find something you want to be better at. For me, better teacher, better trader, and those are the things that, I, on days like today, I want to think about, I want to embrace, while everyone else is chilling out and having barbecues, and that's cool. I don't want to yuck somebody's yum, but days like today, find a couple hours, find out how you can just slay summer, become a better version of yourself. That to me is what this day means. If that means a couple hours in a book, or a couple hours in a course, or a couple hours studying charts, or maybe a movie that's going to change your mindset. Think about not just today, but how can you really slay summer? And while everyone else is chilling, you're hammering away, honing your craft. And when you come back in fall, and everyone else is sort of getting their sea legs back, you didn't mess around. You didn't waste the summer. And that's really what it is. Don't waste your opportunity to become better. That's what today means for me. Right. And so again, thanks for your time this morning. Charts and Coffee will be back tomorrow, same time, same station. And again, I hope you all have a great day, and find a way to be better. I think that's what the folks who sacrifice would want. My 2 cents. Have a great one. Be good to each other. I'll see you tomorrow.